Hey, hi everyone. Today I want to answer a question from one of the people who asked in the YouTube, okay, about trading time. Okay, they asked me like, hey Colin, when should we trade the market? What time does it open and close? So today I want to talk about maybe just the basic, okay, about when market open, where's the best time to trade, what are the risks involved, and things like that. Okay, so first thing first, I think most of the S&P graduates trade US market. Okay, so US market, let me just write this down. US market usually starts from 9, okay, 9:30. That's our opening time, 9:30. Onwards, they will start. Here, I'm not talking about Singapore time. Okay, so in US 9:30 Singapore time, it will start 9:30 p.m. Singapore time. They will start, and it will usually last until about 4 p.m. Okay, 4 a.m. in Singapore time, 4 a.m. So 9:30 at night until 4 a.m. in the morning. That will be the usual Singapore time. However, during October to March, there's this one daylight savings. Okay, so it will start from, instead of 9:30, it will delay 1 hour. It will be at 10:30 to p.m. Singapore time to 5 p.m. Okay, so it delay 1 hour. So these are all Singapore time for the US market. Okay, for the US market. So for Singapore market, the core trading hour, the main opening hours are 9 to 5. Okay, but I don't trade Singapore market. Very long hours. 9 to 5 Singapore time. 9 a.m. to 5 p.m. Singapore time. Okay. Most of the time they don't take break. Okay, last time SGX used to take break. I think now they don't take any lunch break anymore. So it's just continuous trading. Okay. So next question is about market. Is what are the opportunity and risks, okay, during the opening hours and closing hours. So you must understand that the most of the liquidity that is traded in the exchange happen only at a few period. Okay, whether it's US market or whether it's Singapore market, it usually happen in a few period, which is near the opening. Okay, that means after opening, the first half an hour, and near the closing, last half an hour of the closing. Whether it's US market or whether it's Singapore market, the liquidity or where the price move the most, right, is in during the first half hour and the last half hour of the market. Okay, so this is the liquidity. Next thing is, what are the opportunity and risks? Is there any opportunity and any risk in this? The answer is yes. Okay, why are they opportunity? Okay, give you an example. Let's say we talk about Singapore market. It's applied to US market also. Let's say example, the night before US market traded very well. Okay, and went up 3% or 2%. Okay, so what happened to the Singapore market in the opening? Usually, when this happened, the market will have a what we call gap up. Okay, a gap up. Okay, a gap up. And what happened? What is a gap up? Basically, what happened is the night before it closed at a lower price, and then next day, right, once it opened at a higher price. Okay, that means in between the yesterday's closing and today's opening, there is a gap. Okay, and this is usually due to the market, due to news and things like that. But there are opportunity and there are risks over here. Let's talk about the opportunity. For a day trader, okay, for day trader, what they usually do in this kind of situation is they will do what we call a fade. Okay, they will do a fade of the price. Fade meaning to say, if the price goes up, they fade it downwards. Okay, fade it downwards. They will fade the market downwards. Okay, this is applied to day trader. Many years ago, I talked to some of those people who trade futures in Singapore, or whether it's Taiwan futures. They will actually fade the market. Okay, they will, when the market gaps up, they will have certain strategy where they will do a short to fade the market back down. Okay, this is called fading, and this is what day trader do. Okay, maybe I just share with you a very simple strategy, and and in terms of fading, okay, please go and do more research. Okay, this is may not be enough information. How they do fading, one of the strategy when in the 2-day trading is, let's say example, the day close is like this, okay, and next day open at a gap up price. Okay, once open at a gap up price, you do not know whether it go higher or lower at the opening price. So what happened, you will wait for about 5 minutes. Okay, after the 5 minutes, you will know the highest price it will go and the lowest price it will go already. And middle price gap up, they will know the highest, the 5-minute high and the 5-minute low already. Yes or no? Okay, so in the first 5 minutes is where the transaction is the highest. The liquidity is highest. So what they do, they will do a short. Okay, they will do a short in the next 5 minutes. They will do a short and then put a stop loss at the high of the previous 5 minutes. That means at the open, where after 5 minutes, where is the highest price, they will do a stop loss above here. Okay, and then they will short it down. Okay, that's a very quick trade. Okay, that means they are betting it go down, but put a stop loss above the high of the 5-minute chart. This is a very simple strategy, okay, bread and butter strategy. Why? Because as the market, after the initial liquidity rush, people will start to become more sensible. Like, hey, actually maybe not so high, right? Then they will sell it down, or people will take profit. That's why the price will come down. Okay, so this is an example of a day trading strategy. Okay, there are many different forms of it. This is one form of it. You can even, some people even draw a chart of how the price will move. It looks something like this, like this. Okay, so this is their when day trader, they look at this kind of chart. When the market will open up, it will go high and then it will go down. During lunchtime, will be very quiet. Then the closing will go higher again. From this pattern, there are many different strategy that you can come up from this pattern. Okay, so but I don't go too much into day trading and things like that, because frankly, if I don't advise if you are not a full-time trader to do day trading. Okay, okay. Second one, what are the risks? Okay, this is opportunity. What are the risks when we are talking about market opening hours? So as not a day trader, generally, right, if you have the time to watch the market, you want to at least wait for 30 minutes. Okay, 30 minutes for the market to settle down. Okay, after the market has settled down already, then you look at the market and see whether it is going higher or lower. So this is like a cooling off period. So generally, if let's say the market gap up and you immediately buy, you may end up catching at the highest price. Okay, so if you have time, then what you want to do is you want to wait for 30 minutes. After 30 minutes, that is the true price. Okay, that's the real price. Okay, when there's a lot of newbies coming in, the retail coming in, the professional coming in to fit the market, the newbie coming in to trade. So after 30 minutes, right, the market will settle down. Okay, then look at the price. Then from that price, then you determine what action you want to take. This as for SMT graduates, right, if you have time, sometimes we talk about breaking the previous day high. If you have time, okay, and you can watch the market, then the breaking of the new high, right, you want to wait for after 30 minutes, then it break the high, then you consider entry. Okay, but if you don't have the time, it is fine. Okay, why? Because usually for our trades are longer term, not so short term. Okay, let's say position daily can be like 3 months or so it's not so critical in terms of that 1 day's price. But if you have time, okay, you can wait for 30 minutes already, then mark the high to enter. Okay, this is for SMT graduates. Some clarity, some distinction of entry. Okay, so the danger is if you immediately enter, once it breaks the high, it will maybe catching at the highest point. Okay, maybe catching at the highest point of the price. So that is the danger of getting in. But putting in context, if you're long term, in the 1 day fluctuation, not so important. Okay, so best time to trade. If you are day trader, you love the opening and closing hours. Why? Because that's the most liquidity, the most volatility. If you are not a day trader, what you want to do is the market become clearer, become less noise after 30 minutes. Okay, after 30 minutes, it become less noise. So that would be the best time to enter if you are longer term. Okay, so and the quietest period, whether is it from US market or from Singapore market, is in the middle. Okay, during lunchtime. Last time we got lunchtime. Okay, so during lunchtime, people go for lunch, people are not so looking at the market, then the market really be quiet, settle down. That is like the real market. Okay, like the real, where's the market going? That will be the real market. So again, you're short-term trader, you won't trade the middle, you always trade the beginning and the end. Okay, but for day trader. But for long-term investor, the real price is actually after the 30 minutes. Okay, so that would be for what is the best time to trade. Okay, and you have the whole time until maybe near closing. At the end of closing, there are also trading strategy that you can form for people like day traders and short-term traders, but I won't go into that today. Okay, so lastly, I want to share with you, for most people, it is best not to trade short term. It is best to trade longer term. Okay, if you have once a day, maybe you can do position weekly and hold a position maybe from 3 months and above. If you want to do shorter, even you can do swing weekly. That's about 1 month trade. Okay, 1 month trade. Or you want to do swing daily, that is about 5 days trade. You can still do that on 5 days trade if you can monitor on a daily basis. But for people who don't have time to look at the market, maybe you say, Colin, I only have once a week, I only got half an hour, so how? Then you will focus on more of a position weekly, which is about 1 to 2 years trade, and swing weekly if you want to trade. So these two will be more for longer people who don't have time to monitor the market. These two will be for people who have afford the time to look at the market on a daily basis. Okay, so this is a little bit of best time to trade, opening hours, a little bit of a strategy. Please go and research, and I hope this is useful for your trading journey. Okay, thank you. Bye.